Today we're going to talk about protection. This is the one area in your financial life that you really need to get correct. Something critical, something drastic could happen to you, and then your entire plan could fall apart. When we look at protection, we want to make sure we're looking at what are the most catastrophic events that could happen to me, and what am I doing to make sure that my life can continue to keep unfolding the way I envisioned it, no matter what happens. And things like wanting to buy certain houses, maybe start a business, a family. Maybe I enjoy to travel. What's that going to look like in the event that you're getting sued or you became sick or not having the right legal documents in place? We're going to definitely dive down further into that conversation today to give you some more insight on what all that looks like. So when planning, when we're really looking at things, we need to boil it down. So we've boiled it down to 5 foundational steps. And those 5 foundational steps are: first, to get organized so we can understand where we are. Second is to protect what we have. Third is to be able to create a habit of saving. Fourth is making sure we have a good amount of money on hand to where we're actually in a position to where we have the most control and flexibility. And then fifth is having a realistic strategy to how we're going to pay off our debt. And for the sake of today's conversation, we're really going to dive down into what are we doing to protect ourselves. When we look at planning and getting organized, first place we need to start is what we always refer to as a balance sheet. So for any of you who are not familiar with the balance sheet, what you're looking at on the screen is actually a platform we use called a living balance sheet. It's a tool everyone that we work with gets. And a balance sheet really takes into consideration what we call one-year assets, everything that you own, everything from your car, bank accounts, retirement accounts, businesses, all of those things that you actually have some kind of value to. And then your liabilities is everything that you owe, someone that you owe maybe money to, or maybe there are taxes you have to pay. Those are all fit into liabilities. And at the end of the day, if you take your assets and then you subtract out your liabilities, you get your net worth. And your net worth is ultimately meant to help you be able to not have to work for an income later on down the road, and provides you that choice to not have to continue to keep having to work for money. And on the bottom, cash flow, that's the most critical part of your finances as well. If your income were to stop today, what are you going to do? What's next? We're going to talk a little bit more about that in our next conversation. However, the main thing we want to focus in on for today is protection, and that's on the top. Think of it like a moat around a castle. It's the one area that we want to make sure we don't want to start building a castle and then create the moat. We want to make sure we have a strong defense to make sure we're protected before we actually even start doing anything. So protection is a huge area that we need to make sure is done right. And if it's not done right the first time, we can never usually go back in time to fix it. So we always want to make sure that everything is properly done right now. There are 2 main reasons why most people avoid getting the right type of protection. The first one is the cost. Like, I have to give up something to acquire some kind of insurance or some type of documents. And of course, it can hurt us sometimes, depending on what the cost is actually going to be. So you got to, of course, understand what really fits into your financial life. But at the same time, most people fall in the boat of they're not sure what they need. So these are 2 categories. There are a lot of other different reasons. However, they usually always boil down to these 2. And what we really want to be able to do is expose like some of the things that you really should be looking at in your protection, and maybe some things that you can start doing today to become better protected. So we first have to understand, why is protection important? So we talked earlier about our lifestyle. We talked about all the things that we want to do, our ambitions. Now let's put some example to this. So if, let's say you're making $200,000 of income, you're a family, you're 35 years old, and over the course of your career, you're anticipating some kind of a pay increase. Why? Well, as we rewind back in the past, everything was less money back then, and as time progresses, everything just starts costing more and more. So we have to take into account some kind of increase in our income. And if I look over the course of, let's say, 30 years, so I was going to put me at 65, that means that I'm going to make roughly about $9.5 million. So think about that for a second. $9.5 million. That's a huge number. So like student loans, everything else that we have really just kind of looks like nothing compared to that. Of course, you got to pay for debts and taxes and all those other things, but this number is going to provide you the ability to do all that stuff. Well, let's also take it to the flip side. If we could do something drastic here, we could take all that money that you're going to make, and then we're going to put it into some kind of an investment. And that investment is going to grow at 4% after taxes and after fees every year. Well, what that actually means to you now is that you're going to make about $19.4 million. So the opportunity that exists, if you could save every dollar you made today, that's roughly about $9.4, $9.5 million you're going to make. It's a huge number that we're looking at. So most people realistically don't actually ever get to keep that because, well, we got to make sure that there's priorities of how we're doing things, and also protection. If we're not protected properly, well, all this really could mean nothing at the end of the day. So the range that's at risk for this person is $9.5 to $19.4 million. Like huge numbers that we're looking at here. So, what do we need to do to make sure that these numbers are going to be okay, that our life is going to continue to keep unfold? And the first place that we really start at is there's 12 different critical areas of protection. And where we look at this is not from a letter, we look at more from colors, because colors at the end of the day are so much cooler. However, we always start from auto insurance all the way down to life insurance. There's really no specific list of priorities. The main thing we want to prioritize is we want to go from red all the way to green. So green is optimal, red is warning, and yellow is moderate. And this, what you're looking at here, is a typical snapshot of what we see with most people. Either they don't have enough coverage, things aren't titled properly, maybe they never purchased something. A lot of things keep getting brought up are legal documents, as you can see here. That's like 4 of the items on here already that can be done easily with pretty much just taking a little bit of time and just dedication to be able to get them done. And we're going to talk a little bit more of what type of documents, like what do they really mean to you as we progress throughout this conversation. So we got to first, take a look at like, well, what are our areas of protection and what do we need to do to get optimal? How do we get green? So first thing we look at is auto, homeowners, and umbrella. So for any of you who are not familiar with an umbrella, I'm going to talk a little bit more about that in a second, but these are areas like if you're getting sued. That's the main thing that we want to look at, is if we're getting sued. So what you want to consider is that, like, let's say that you're driving down the road today and all of a sudden you hit someone, and you find out that they are pretty much paralyzed. They're not going to be able to work for the rest of their career. Let's say that they're making the same amount of money that we talked about earlier, and they have a spouse and kids at home. They could come around and they could sue you. And typically they would sue you for the amount of lost earnings that they would have. So if they were taking the example earlier, that's 9.5 to $19.4 million that they would potentially be earning or have the possibility of having over the course of their life. So we're not also even taking the pain and suffering, which is a whole nother component of there. So, don't be too alarmed right now. Don't be too worried, because these things can easily be fixed. And the first place that we want to start is what we call bodily injury. Bodily injury is if there's one person involved in an accident. On your auto insurance policy, you'll see that's how much your policy will cover to the maximum. That's it. Per accident is if there's more than one person, that is the total that they will cover all combined. And then at the same time, there's another part of your policy, what we call uninsured and underinsured motorist. So uninsured and underinsured motorist, if the tides were turned, and now you're in a position to where someone hit you, and you find out that they don't really have much coverage, they just lost their job, this allows for you to sue your insurance company for any lost wages and for pain and suffering in the event that you're now in that same position. So bodily injury per accident, uninsured and underinsured motorists are very important to have on your policy. And sometimes people will either ignore uninsured or underinsured motorists because it's either just an additional cost, they're not really sure about what the purpose is, and it tends to be maybe a little bit more than the liability on your policy. So this is a main area, really huge focus that you should look into. And an umbrella policy, well, this is something that sits on top of a car, house, boats, RVs, and there's some other things that can be covered as well. They start in $1 million increments and go up. Based off of our example earlier, well, we should have probably more than $1 million because there's $9 million or more at risk. So we might want to consider more than that. And if you're in a state that allows for you to have uninsured and underinsured motorists on your umbrella, you might want to consider adding that, because that can be a huge part in the event that you're ever in a position to where you've lost wages and you have some pain and suffering because of an accident. You can go back to your insurances and be able to recover some of those losses potentially. So the person who handles auto and homeowners can really be able to help you get an umbrella policy. And usually maybe 1 out of 10 people we talk to don't have an umbrella, or have an umbrella, and the rest usually don't have one. So you want to make sure, like, this is an area you should really consider trying to get something in force. The next thing of protection we look at is health insurance. And this area is rather simple. It can seem very complex. I boiled it down to a couple things for you. The first thing is, if you are rather healthy, maybe you go to the doctor once a year and you need some blood work done, maybe you're just getting your annual checkup, you can typically go for a high deductible plan with what they call an HSA or a health savings account, because basically they will cover, a typical insurance policy will cover your annual physical, they'll cover some of your blood work, just depending on the type of coverage you have. And then the HSA can allow for you to save money away on a pre-tax basis that can be used for qualified medical expenses. And then on the flip side, if you go to the doctor frequently, maybe because you have specialists or there's certain care that you need, you might want to consider a copay plan. And also, if you're going to have children, it might be something you want to look at as well. The main factor out of all of this is that you really want to take into consideration, what is your maximum out of pocket for each year in the event something catastrophic were to happen. And you'll be able to see that on your policy summary where we'll say, hey, this is how much you'll be obligated to pay in the event that you were to hit the maximum of the policy. So you want to look at that number plus how much you're paying each month for your insurance coverage. So health insurance is pretty simple. If you work for someone, usually you're very limited on options. If you don't work for someone that has health insurance, you can typically be able to go to the market and look for different choices. Next thing we look at is disability insurance. Disability insurance breaks down into short-term and long-term. Short-term is usually only available through a company or through an association. So if you ever want short-term disability, you can probably look into one of your associations. We always look at long-term disability because that's the area that could catastrophically hurt you in the event something happened, if you became sick or injured. And just a quick fact for you, 90% of disabilities are due to a sickness. So something that wasn't expected. So we want to make sure that if something happens to you today, are you protected at least until your 60s? And disability insurance, we always want to look at long-term. Short-term is not bad to have. Also, sometimes you can be able to save up enough money to cover some of those expenses if you're okay with that. So what does it protect? Main thing is we talk about your salary and bonuses. So if you only have group insurance through your employer, your bonuses might not be covered. If you're a practice owner, well, you can actually have your own individual disability, which it covers your salary, and then it also covers your profits, or sometimes known as your business distributions. Even if you aren't taking money from the business, all of your income, if you're an S corporation or an LLC or what we call a pass-through entity, all of that money gets dumped onto your personal tax return every year and you are taxed. So that can be accounted for in getting disability insurance. But then there's two other types of coverage as well. There's what we call business overhead, which covers monthly expenses, rents, salaries, maybe half of your salary to replace you. And it provides a certain amount of time for you to basically get your business in order to see if you're going to sell it, close the doors, what's going to happen from there. And then if you have more than one business partner, if it's more than just you can get what we call disability buyout. So disability buyout allows for you to basically, if something happens to you or your business partner or business partners, it'll provide a lump sum of money in the future to buy out their ownership. So it's another feature you want to have in what we call a buy-sell arrangement, which I'm not going to spend a whole lot of time on that, but those are some options you have. And then what you should consider is most disability policies, of course, this is not exactly 100% accurate. Most disability policies will cover about 60% of your earnings. So if you work for someone who provides disability for you, usually your salary is covered for 60%. If it's paid for by them, it actually would be taxable to you. So whatever that benefit is you would receive would be taxable to you if you ever became sick or injured. And then all of your bonuses or anything else that you receive beyond that might not be covered. So that's where individual disability coverage can come into play, why it might be important to have that. But then at the same time, group policies are not individual policies. So what does that mean? Well, disability is a very hard area to determine of like when you actually qualify to receive any money due to a sickness or injury. So there are three main components you always want to look at, is what we call total, partial, and also presumptive disability. And of course, for today's conversation, I'm not going to dive down too far into this. If you want more details, I'm going to tell you a little bit more of where you can go from here. But also at the same time, short-term disability insurance helps bridge the gap between short-term to long-term. So if you work for someone, sometimes they'll have short-term and then that will stop and then long-term will kick in. If you have an individual policy, sometimes you can have that start sooner. So maybe it's 90 days versus having to wait 6 months, so 3 months versus 6 months. So you always want to make sure you're looking at your options. And at the end of the day, individual policies are usually going to be your better bet. However, they have more stringent requirements to be able to qualify for them. So if you're always looking at your options, it's something you should definitely look into. Another area we look at is what we call legal documents. So legal documents, of course, a lot of people are always saying, I'm going to get these done. I've been meaning to get these done. 1 out of maybe every 10 people we talk to have them done. And this is something very simple to get done. You can usually complete them within like 2 weeks if you really put your mind to it. And they break down into 2 categories, basic and advanced documents. So when we look at basic documents, that takes into consideration a will. So what is a will? Well, just full disclosure, I'm not an attorney. However, I do know enough around these things to be able to give you some education. But you always want to make sure you're talking with an estate planning attorney to get these documents done. A will, in the event that something happens to you, it designates where does your stuff go. So if you have animals, cars, bank accounts, children, who gets that? Like who is now going to care for your kids? Who's going to get your animals? So for anything that doesn't have a beneficiary like life insurance and 401ks and IRAs, those are things that you'd usually, a will is super important to have in play. A living will, also known as a last wishes, in the event that you're ever in a vegetative state, what do you want to happen? Do you want to be kept on life support or do you not want to be kept on life support? So those are some big decisions that sometimes families have to make because people don't create those documents. And it's something that I would say out of all of these, you really should have something like that in play. And then the other 2 we have is a power of attorney and then healthcare surrogate. So power of attorney is financial related, healthcare surrogate is medical related. So in the event that you can't make financial or medical decisions on your behalf, so most of the time each spouse will put each other as their power of attorney and healthcare surrogate. But let's say that you don't have a spouse, or let's say you're both in an incapacitated state and you can't make these decisions. Who do you now put as your backup? These documents clearly define that and to make sure that the right things are being done in the event that you're in a position where you can't make these decisions. An advanced document, and there's usually just one of them that we refer to as a trust. A trust is basically another version of yourself, but in paper form. So what do I mean by that? Well, you can put a house, bank accounts, you can beneficiary life insurance and different retirement accounts in there, and you can designate what happens to those funds through that document. So who gets it, how much, and it transfers wealth in your family to the next generation or the next family members a lot easier than if you didn't have one. A lot of times people will avoid getting a trust because they're like, well, I don't have kids, I don't have a lot of assets. What happens in that circumstance, if you have a will, all of your things will go to the state, and then an attorney is assigned to then basically have to settle your estate. Could cost a significant amount of money, and at the same time takes a lot of time. So trust is something everyone, I personally believe, should look into. However, of course, talking to an estate planning attorney will really be able to help narrow that down for you of what makes the most sense for your financial life. Another thing we look at is life insurance. So life insurance, there's 2 different types, term and permanent. Term insurance, basically it's the best example is like renting a house. If nothing happens to you, you might not get any benefit from it, or your family might not get any benefit from it. So it's like buying auto insurance. You buy it, you pay for it. If you never file a claim, it's pretty much just lost premiums. The good thing about term insurance is it gives you the most coverage for the least out of pocket every single month, which is a really good thing. So if you're wanting a lot of coverage, you might want to look and go into term insurance. And then there's 2 different variations you can look at. There's what they call yearly renewable term, where they look at your age today and say, well, how much does it cost for you at this current age and your health rating? And then every single year the cost goes up. Or you can default to where most people like to go is towards a level term, to where they lock it in for a set period of time. That way the cost doesn't go up during that time period. The other one is permanent. And permanent takes into consideration what we call universal life, index universal life, variable universal life, whole life insurance. There's so many variations that are out there. But the whole idea behind it is like owning a house. People love owning a house because it builds equity for them. There's some kind of value inside. Not all of the policies are the same, which for the sake of today's conversation, I'm not going to dive too far into that. However, what happens is if you're really, really, really good saver, and you're like, I'm looking for another way to get tax advantage assets, this could be a possibility to put money into. And at the same time, money inside could potentially grow guaranteed. It could guaranteed grow up. It just depends on the policy you get. And it's life insurance. So if something happens, well, you can now actually be able to make sure your family's cared for. And also, going back earlier, you can take money out of the policy along the way. When you have the right type of term insurance, you can typically change that into permanent insurance as long as you have coverage in force. And you don't have to go through medical exams and other different things to be able to qualify again. So some of the things that you really should consider between life insurance is like a need versus a want. So do you really need life insurance, or is it more of a want? A lot of times when people approach it, is they will look at how much in debts they have, how much it will cost for their kids to go to school, and then they come up with some number that's tabulated from all of those different numbers, and then that's the amount that they buy. The way we look at life insurance is you should be looking at what would it take to replace your income in the event you are no longer here. So you've spent so much time, so much effort trying to get to the stage of life that you're in. Do you want your family to continue to enjoy all of your effort that you put into for the rest of their life as well? And the number how that's usually determined is based off of how much you're making and your age. So depending on your age, it's a multiple of your income, and we call that human life value. So human life value is a big number. We can always talk more about that later. But then the main thing is if you buy group insurance, your group insurance is sometimes limited to how much you can get. And at other times, you might not be able to change that into permanent, depending on where it's at. And then also the company is super important. So company from financially, there's a report out there you can look up yourself called the Comdex report. It shows you a ranking of all the life insurance carriers out there and how financially strong they are. So if they're in the 90 or higher, it usually means they're in the top 10 percentile. So you can always go look that up. And then also do you determine a mutual versus a stock company. So stock companies tend to have less expensive term insurance. The variations that you can maybe change that term insurance into might not be something you want, maybe it is. However, at the same time, a mutual insurance carrier tends to give you a little bit more flexibility from some of the options that you want to have. If you want coverage that might be, let's say, guaranteed to be around for the rest of your life, which they both can do the same thing. It's just a really good thing to sit down and talk about that because not all policies are the same when you're looking to buy life insurance coverage. And one last thing to touch on for today is business stuff. I'm not going to spend a lot of time on this, but there are some main things you should look at. Main thing is professional liability. So in the event that you're in a position to where you're getting sued, insurances, same type of thing. Entity structure, how's your business set up? Is it an S Corp, sole proprietor, partnership, LLC, buy-seller agreement? Maybe you have one, maybe you don't. If you work by yourself, maybe it might be needed or not. Sometimes people don't take the next step to what we call fund them. So they don't buy certain insurances and products to implement that program for them. If you have key people, the ones that could impact your time or your income in the event that they left, there's what we call retention stay bonuses is really important to put into play. And then if your business, let's just say a storm comes through or whatever the case, having insurance in there to make sure you can be able to survive while you're rebuilding. And at the same time, if there's cyber attacks, so like a lot of things today are starting to go online. So making sure that you're okay in that circumstance too. We've covered a lot today. And if there are some questions that you have or some things that you're still not certain about, maybe you want a second set of eyes on how you're doing your current financials and how you're approaching your protection, there's a form below that you can complete to where you can check off some of the boxes that interest you. Someone on our team will get back out to you as soon as possible. And keep in mind, this is the complimentary 30-minute meeting. We'd be happy to sit down and talk with you to see what we could do to provide more value into your life and to make sure that you're optimally protected. Our next conversation, what we're going to be jumping into is, we're going to show you how to effectively live your day-to-day life, but at the same time, be able to save for the future and not have to worry about it. That's such a great feeling to be in that. Join us for our next conversation where we talk about cash flow. You'll be able to find a link somewhere around this video. But for now, we'll talk to you later.